Good morning, good afternoon, good evening. Welcome back for another video. Hey, in this video, I just wanted to do a quick analysis on Bitcoin and take a look at several different charts, including several metrics that I've already looked at in determining whether or not we have already reached the bottom, that the bottom is behind us as far as 15,600, etc. is concerned. I do believe that that was the bottom. I am sticking with that. And I do believe that we are in the middle, not the end, but the middle of some kind of a bear market rally, similar to 2019, probably not to the same extent as 2019, but similar. And that we will see Bitcoin at some point in the next 6 months or so between $30,000 and $42,000, maybe sooner rather than later for $30,000. And I'll explain why I'm looking at this chart. But anyway, yeah, going to be lots to talk about here. And if you like this content, smash up that like button, subscribe to the channel, and leave a comment in the comment section. So what am I looking at here on this first chart? It's just a simple Bitcoin daily chart. And you can see that we struggled at this key level that I talked about on my Twitter account, at least last week, that it's like, how many times do we have to go up against resistance before we break through? We had a couple days where we attempted to break through this resistance, the monthly range high, and then we took a little bit of a dip, gained a little bit more momentum, and broke through on Friday, broke through dramatically. And there was another level at $21,800 that I just decided not to include on this chart today because we blew through that very quickly as well. And so now I have my eyes set on our current range, the top of our current range. And so we were in a range between $21,000 and $25,000 a few months ago. And then when the FTX drama happened, we created a new range between $16,000 and $18,000, but now we're back in that range between $21,000 and $25,000, and this was the top, the weekly close top, the daily close top. So $24,500 or so. I believe that that is going to be the next key point of resistance if we get up there. And I do believe that we are more likely to get up to that level than not. And so then the question is, do we break through there? Now that is a key question, because if we break through there, we're essentially committing to get up to this next range top. Because if you look at historically, and this is really important to understand, historically, Bitcoin between $24,500 and $28,500, that $4,000 gap there, we have spent such a small amount of time that whenever we go through these levels, we go through them very rapidly. And so first time up in the end of 2020, we went from $24,000 to $28,000 in a matter of days. And then on the way right back down, we went from $28,000 to $24,000 again in a matter of days. And that was with that Luna collapse and everything that happened with Three Arrows Capital and everything like that. And so very little time spent here means most likely that there would be very little time spent there moving on back up whenever that is. Now, there are a lot of people hypothesizing that this level of resistance is just going to be too strong and we're going to get rejected there too hard and go back down, maybe fill some CME futures gaps at $19,500 or so. But I believe that that will come after any kind of bear market rally, if it comes at all. I do believe, my suspicion is that something is going to happen similar to the COVID crash. Maybe not to the same extent, maybe not to the same level of fear, but the Fed, that they're going to raise rates and then pause, and that they're going to try to pause as much as possible before lowering rates. And a little bit after they lower rates, that is when something's going to break. That is my opinion, not financial advice. Take that with a grain of salt. If something breaks, I could see us going right back down to these levels, maybe filling that CME futures gap at $19,500. But for me right now, yeah, we may struggle at this range top because, again, we are committing essentially to go up to the high 20s. And I do believe that eventually we're going to do that. Now, remember, I am talking 6 months here. So the action that we've seen over the last 2 weeks is very aggressive. There's no way we're going to sustain this forever. But over a span of 6 months, we could get rejected there. We could certainly go back down, maybe even go back down to lower 20s, upper teens, and then eventually make our way up there. We'll see. But in my opinion, again, $30,000 to $42,000 within the next 6 months. I am expecting that. I am expecting, again, that similar rally if you look at 2019, but just not to the same extent, not a 70% retracement like what we saw in 2019, more like a 60% at best retracement. Maybe not, that might even be too high. And I've talked about this as well. So we're looking at Bitcoin dominance on this chart. Bitcoin dominance is rising. I did share a chart recently overlaying the 2019 Bitcoin price with the altcoin market cap. And you can see, if you were to find that chart, I know you can find it on my TikTok for sure, that Bitcoin massively outperformed altcoins in that time. And so what we saw was Bitcoin's dominance rising. I would expect to see a continuation in this rise in Bitcoin's dominance. Does that mean that altcoins are going to just flounder or anything? Not necessarily. In their Bitcoin pairs in general, yes, but there's going to be times to trade and to scalp altcoins. But for the most part, Bitcoin, they will bleed against Bitcoin. So let's take a look at some charts here. Some things that, again, would further confirm, in my opinion, that Bitcoin did bottom out at $15,800 or $600, and that if we were to see that, again, that would be because of something similar to a COVID crash. The first thing that I'm looking at here is Bitcoin's realized price, the 7-day moving average. We are back in profit. In other words, every Bitcoin holder in summation, they were in the negative, and now we're back in profit. If you look at the MVR Z-score, what that essentially means is that we are back at a positive Z-score instead of a negative Z-score. And you can see that historically, those have been phenomenal buying opportunities. And once we broke out and everyone was in profit, the average Bitcoin holder was in profit again, we've had some pretty significant moves higher, some rallies. We did have a fake out here in 2015, but otherwise we've rallied pretty aggressively since then. And so that is my hope and expectation, especially. All right, so this rally so far in the 2023 has been aggressive, which makes me think, all right, well, let's compare this. 2019, it was just, all right, 2015 to 2016, it was just a slow climb all year until 2017. We had the blow off top there. In 2019, it was a very aggressive rise. And then we came back down to earth and spent some time back under the bull market support band. It is looking more and more like 2019 versus 2015. I would prefer 2015, but hey, you got to play with what the market's giving you. And the market, as of right now, is giving us more of a 2019 scenario. Other things that I'm looking at here, dormancy flow is just at its lowest level ever, which means that those who are long-term holders have been holding very tightly. And so now we're kicking back up. They're taking some profits as they've been accumulating. We've seen institutions, larger entities accumulating, whales, I should say, accumulating heavily during this dip. And I've seen information, people saying that that's not the case. From every metric that I've seen, whales have been accumulating and long-term holders have been accumulating, and they've been showing a great deal of conviction to the point where they have barely moved. They have moved their Bitcoin less than ever before. Now we're climbing out of that, which is a good sign. If I could encourage you to look something up, look up HODL waves. When we see the HODL waves peak, that is around the time that Bitcoin bottoms out, and then we see it going back. In other words, Bitcoin going back more so to short-term holders. That is around the time that Bitcoin starts its rally. We have peaked when it comes to the HODL waves. Other things that I'm looking at here, Bitcoin reserve risk. In other words, how risky is it to hold Bitcoin? It is also at its lowest level ever. And so why are these two metrics at their lowest level ever? It's because this is Bitcoin's first ever true bear market, in the sense that we have an actual recession. And so Bitcoin is below its 200-day moving average. It was below its 300-day moving average, 300-week and 200-week simple moving average. It was below both of those for a while. It is back above the 300-week simple moving average. It is not back above the 200-week simple moving average. Those are levels we have had prolonged times at these levels. Those are levels that have not been breached on a monthly candle, on a monthly closing candle in Bitcoin's history. Bitcoin has experienced its first ever true bear market, which means that this is a phenomenal generational buying opportunity for Bitcoin. Address growth price ratio. I've shared this on both of my channels here, the YouTube and the TikTok. I have been looking for us to get to this point right here, this yellow line. Whenever Bitcoin, that yellow line is a point of resistance. We've had fake outs there, but whenever Bitcoin breaks above the yellow line, that is a confirmation, at least in my opinion, that we are at the beginning stages, the early stages of some kind of a rally. Now, again, a bear market rally. I don't believe, I'm seeing calls for $100,000 Bitcoin in 2023. I don't believe that's going to happen. I would prefer if that didn't happen. If that does, that's going to that's going to be fun in the moment. But I think that's going to leave a lot of people in the dust because, again, I mean, nobody's expecting that, which could be a reason why it would happen. But I really, really do not think that that's going to happen. And I think that, again, $30,000 to $42,000 will be our point. Now, another thing that I'm paying attention to here, Bitcoin's exchange net position change, seeing a lot of red, but we've been seeing a lot of red in this chart. Red is good. People are taking their crypto off of exchanges, their Bitcoin off exchanges, holding it into cold storage or wherever they may be holding it off of exchanges. We are seeing a lot more red recently, and you can see the real turning point with that was the COVID crash, which is also the time that the money printers were turned on. This is a significant point, a significant turning point when it comes to faith in the US dollar, that it is worth holding. And you can see that people, their faith in the US dollar, it has decreased dramatically, and this is what we're seeing in this chart. Now, I want to talk about why this chart is important because, yeah, we've seen a lot more red, and yet Bitcoin's price has gone down dramatically. And so what's the significance of this chart? And I would say that there is a significance in that it is not as a measure of like, Bitcoin's not going to go down all that much more because we're seeing a huge exchange net position change. It's more so Bitcoin's supply. And I've talked about this a ton. I haven't talked about it in a while, but there is going to be a day when it's going to be very difficult to buy actual Bitcoin on exchange. And I'm emphasizing this word actual because FTX, what we found out with FTX, which is a real concern of mine, is that they were selling Bitcoin, but they were selling paper shares of Bitcoin. They were selling Bitcoin that they didn't have. And that actually has me concerned as to, I've seen Cathie Wood call for $1 million Bitcoin this decade. And I think I do believe that could happen. But the biggest thing that would prevent that from happening is paper trading of Bitcoin. It's like essentially you can turn 21 million Bitcoin into 84 million into 200 million. That is what's happening with silver. Silver, I used to be a huge silver bug. Until I found out how manipulated the market was and how much paper trading is going on with silver. It's like 500% of the actual supply. If that happens with Bitcoin, I'm not as confident that Bitcoin will hit $1 million this cycle. But, all right, let's just assume for a second that paper trading isn't a thing that we're going to have to worry about as much, especially with crackdowns and with things like FTX being called out. Where could I see Bitcoin going next time around? Well, I'm looking at this chart here. What is this chart? This is a Fibonacci chart, and you can see where Bitcoin went. It went almost to the top level of where normal Fib charts go, to the 4.236 extension, which in this chart would have been around $72,000. Now, it peaked a little under there. If you were to go to the Bitcoin market cap chart, what you would see is a perfect rejection at the 4.236 Fibonacci retracement level. I think I said extension. I meant to say retracement level. If you remember, I'm really big on the 1.618 Fibonacci retracement level, that has marked the mid-cycle bottom in 2021, 2017, and 2013. And so it did it again it did it in 2021. And I'm wondering, all right, how far are we going to extend next time around? And then different scenarios looking at future hopes with Bitcoin. And here is a layout of what a 1.618 Fibonacci retracement level would look like, but also what the top of this channel would look like. I'm going to have to extend my screen here. It's going to make a $69,000 peak look very, very small. And so you can see a 4.236 extension would put Bitcoin at $241,000 at the peak of the next cycle. I would say this is the absolute conditions are perfect, absolute best case scenario for Bitcoin next cycle. Do I think it's going there? I actually do not. My hope, I want to speak with my heart for a second here. My hope is that we would see a 1.618 Fibonacci retracement bottom in July of 2025. That in some way it would be programmed in that we would see, because that's a $101,000, almost $102,000 Bitcoin. And so if we were to see Bitcoin go to $102,000 at extreme fear in July of 2025, I'd be satisfied. I'd be good, but so maybe that would mean a 2.618 peak and going down to a 1.618 bottom. If you're not looking at my screen right now, 2.618 peak is a $155,000 Bitcoin. Now, I want to say this. I would say it's, in my opinion, that is the upper end of where Bitcoin is going to go next time around. 2.618, that does sound good. There are certain things that I could see making it go beyond that. Then there are certainly things that I could see making it go lower than that. But a 2.618, I would say, is slightly less than 50-50 in my opinion as of right now. But as far as my heart is concerned, a 1.618 peak fear in July of 2025, that sounds great to me. And, I would be surprised if we didn't get to a 1.618 retracement level in general, So looking at this chart here, the reason why I am bringing up this chart is this is going to certainly have an effect at some point. And so just kind of looking at these retracement levels here, we see the 4.236 at $241,000. What conditions would it take for me to believe that Bitcoin would get anywhere near there, or would do similar to what it did last cycle, which would be a 3.618 retracement level, a little bit above that, but in a monthly close below the 3.618? It would be this. It would be if we started seeing these supply dynamics start to work themselves out, because the more and more this happens, the less and less Bitcoin is available to buy on exchanges, the more that we'll see somebody or an institution, some kind of entity with $1 billion have a really hard time trying to buy $1 billion worth of Bitcoin without driving the price up very dramatically. And so if we see some kind of supply crunch, I could see that. The only other logical one that I would say is if conditions are perfect when it comes to the Fed easing and with the funny money working itself out the way that it did last time around, but at the perfect time. I would say that the funny money was very much injected into the system, but it wasn't, as far as Bitcoin is concerned, the timing wasn't perfect. In 2017, the timing was absolutely perfect. And we saw a blow off top. We saw alt season, full blown alt season. In 2021, the timing wasn't quite perfect. And so we didn't see Bitcoin, all of our wildest dreams come true. If the timing is absolutely perfect, which you never know with things like that, my guess is that it wouldn't be, then I could see possibly something like a 4.236 extension or retracement, excuse me, I keep saying extension, or 3.618 retracement. But otherwise, I don't think that's in the books for next time around. I very much believe in diminishing returns, and seeing the extent to which the returns diminished last time, then we'll see. But the only other possible way that I could see us getting up there would be a case of hyperinflation, to which really $241,000 Bitcoin wouldn't really be all that significant, because that is just Bitcoin kicking in as a store of value versus the dollar. And, if we're in a situation of hyperinflation, which I just don't think that's in the books for up to the 2028 halving. But if we're in a position of hyperinflation, anything's in play. $1 million Bitcoin next cycle. I just don't think that is what we're going to be seeing next. And so anyway, that is all I have for today. Just taking a look at the charts right here. So Bitcoin right around the 22.8 level, $23,000 level. That's where it is at the time that I'm making this video. I'm going to hit publish as soon as I can upload the video to YouTube. But I would love to hear your thoughts in the comment section of this video. Where do you think we're going? Do you think we're going to get rejected here at the 24.5 area? You think we're going to break through there? Yeah, but let me know what you think. Otherwise, I will see you in another video. Peace.